How credit cards destroy your finances and what to do about it. Credit cards are like any other loans, except the terms are often not as favorable. If you don't understand interest or how credit cards work, you can end up in a lot of debt. To put it simply, credit cards can be useful if they are used correctly. However, many people get into debt because they don't understand how credit cards work. In this video, we're going to take a look at the basics of credit cards and how they can be used to your advantage. We'll also discuss how interest works and why it's so important to be smart about using credit cards. This is Capitalist Domain, and by the end of this video, we hope you'll have a better understanding of how credit cards work. This way, you'll be able to use that knowledge to make better financial decisions in the future. What is the credit card industry? The credit card industry is a system of businesses that offer lines of credit to consumers and businesses. This industry includes banks, credit unions, and other financial institutions that issue credit cards and extend lines of credit. When you use a credit card, you are borrowing money from the issuing bank or financial institution. This money is then used for purchasing goods or services. Interest, on the other hand, is the cost of borrowing money, and it is typically expressed as a percentage of the amount borrowed. For example, if you borrow $100 at an interest rate of 10%, you will owe $110 after 1 year. The original $100 plus $10 in interest. This means that the credit card issuer made $10 in profit from lending you the money. A lot of factors go into the interest rate you're offered. The annual percentage rate, or APR, is the interest rate charged on your outstanding balance. This is the rate you'll be charged if you don't pay off your balance in full each month. Your APR will vary depending on the type of credit card you have, as well as your credit history and income. For example, if you have a good credit, you'll likely be offered a lower APR than someone with bad credit. And if you have a rewards credit card, you may be offered a higher APR because the issuer is trying to offset the cost of the rewards. Credit cards work by allowing you to borrow money up to a certain limit. This limit is set by the credit card issuer and is based on your credit history, income, and other factors. When you use your credit card to make a purchase, the merchant will send a request for payment to the credit card issuer. The issuer will then pay the merchant on your behalf and charge you for the amount borrowed, plus any interest and fees that may be applicable. The dangers of credit cards. Has anyone ever told you that credit cards are evil? That's because many people don't understand how they work. As a result, they often end up in debt. But if you're smart about using credit cards, you can use them to your advantage. Consumer credit data from the Federal Reserve dates back to the early 1940s. In 1981, the national debt went over the $1 trillion mark. According to a consumer credit report by the Feds, Americans went into a lot more debt in February this year as high inflation put pressure on them. Debt levels increased by approximately $42 billion, reaching nearly $4.5 trillion. That's a seasonally adjusted annual growth of 11.3%, well above experts' projections and setting a new high. Experts attribute this to the fact that many Americans are using their credit cards to make ends meet. This level of debt is not sustainable, and it's only a matter of time before it comes crashing down. So how did we get here? How did the credit card industry trick us into this level of debt? The answer lies in the way that credit cards are marketed and advertised. Credit card companies lure us with low interest rates and offers of cashback or rewards points. They make it seem like using a credit card is the best way to make purchases. But what they don't tell us is that interest rates can change at any time, and that we will be charged interest on our balance if we don't pay it off in full each month. They also don't mention the fees associated with credit cards, such as annual fees, late payment fees, and over-the-limit fees. All of these factors add up to make credit cards a very expensive way to borrow money. And yet, millions of Americans continue to use them, often without fully understanding the terms and conditions. If you're one of those people who is struggling with credit card debt, it's important to understand how the industry works so that you can get out of debt and avoid falling into the same trap in the future. How to stay out of debt. The credit industry is a tricky one, but you don't have to be a victim. It's easy to get caught up in the excitement of buying your first house or car only to find yourself pitched with obligations you never expected. It's even worse when you don't understand how interest works. Here's a little secret. The credit industry loves it when you're in debt. They make more money off of you when you're struggling to make ends meet. That's why it's so important to understand how credit works before you dive in head first. To avoid this cycle altogether, there are a few things you can do to make sure that you're using your credit card wisely. Don't buy anything you can't afford. This may seem like common sense, but it's important to remember that the credit industry is designed to make money off of you. They don't care if you can't afford your payments, they just want you to keep making them. It may be tempting to splurge on a new car or house, but resist the urge. Only buy what you can comfortably afford without going into debt. Know your interest rate. This is the most important thing to know about your credit card. Your interest rate will determine how much you'll ultimately pay for your purchase. So make sure you understand what it is and how it works. For example, if you have $1,000 balance on your credit card with a 20% interest rate, you'll be paying $200 in interest every year. This means that it will take you 5 years to pay off your debt if you only make the minimum payment each month. Read the fine print. Credit card companies are required to disclose all fees and terms in their contracts. Make sure to read and understand everything before signing up for a credit card. Otherwise, you may find yourself paying hidden fees or being subject to unfair terms. Pay off your balance each month. If you don't pay off your entire balance each month, you will be charged interest on the remaining balance. That's why it's so important to only charge what you can afford to pay back in full each month, or else you'll end up paying more for your purchase than you ever intended. Use cashbacks or rewards points wisely. Be sure to take advantage of cashback or rewards points if you're going to use your credit card for purchases. But don't let the lure of rewards points tempt you into spending more than you can afford. Remember, the goal is to avoid debt, not to rack it up. Keep your credit card balance low. The lower your balance, the less interest you will accrue and the easier it will be to pay off your debt. This will help you avoid paying interest on your balance and will also improve your credit score. Avoid using your credit card for cash advances. Cash advances are one of the worst ways to use your credit card. Not only will you be charged interest immediately on the amount you withdraw, but you'll also be hit with additional fees. Avoid cash advances if at all possible. Don't close unused credit cards. It's generally not a good idea to close unused credit cards, as this can negatively impact your credit score. If you're no longer using your credit card, simply cut it up and throw it away. There's no need to close the account. This way, you'll keep the account open and avoid damage to your credit score. The bottom line. Credit cards can be a helpful tool when they are used wisely, but they can also be a source of great financial stress. With its high interest rates and fees, it's easy to get into credit card debt that you can't afford to pay it off. When this happens, it can ruin your financial future. If you're struggling with credit card debt, we discuss the steps you can take to get out of it. Whatever method you choose, the important thing is to take action and get rid of your credit card debt as soon as possible. With some hard work and determination, you can avoid the financial ruin that credit card debt can cause in your life. We hope this video has given you some valuable information that will help you take control of your finances. And if you know everyone who's struggling with credit card debt, share this video with them. It could be the information they need to get their finances back on track. If you enjoyed this content, please share this video and give it a thumbs up. Hit that subscribe button to stay up to date with all our latest videos. And if you haven't yet, click that notification bell to make sure that you never miss a video. We'll see you next time.